Hello, hello. Yes, we are back. This is your host, Sheraz Ahmed, ready to kick off season 2 of the Crypto Valley Association podcast. Let's continue our adventure to discover together the growing trends of this fast moving space and try to shed some light on the mysteries it contains. Today, we are joined by Normad Wooding, CEO of Scrypt, one of the first regulated Swiss companies providing institutional investment solutions. So let's dive straight into the hidden world of asset management. Norman, thank you for being our first guest of the season. How are you doing?
Good, sir. Thank you for having me.
Well, the pleasure is ours. So let's get straight into this. Maybe you want to share with us your first cryptocurrency and or blockchain experience.
It's quite a loaded question. So I started in 2015 mining cryptocurrency, bought an old broken down miner from Bitmain, and then I fixed it together. And since then, I think we've gone through the journey of mining, staking, smart contracts, trading, and doing arbitrage.
Wow. Okay. And so maybe you can tell us a little bit about that journey and where you ended up, because now you're the CEO of Scrypt. So you came a long way.
Yeah, there's been a few ups and downs. So I started at university, like I said, mining. I then went on to do my master's thesis on blockchain and smart contracts and aligning agency and principal incentives.
Mhm.
So a simpler term to say that is, how do you make an employee or people who are part of your organization, how do you align their incentive with the organizational goals?
Mhm.
And we found that using smart contracts was around 33% cheaper and more efficient than traditional contracts because of monitoring costs. That might be a slight dive into the technicality of it, but I think I've been immersed or attracted, if you will, to blockchain and crypto because of every aspect and its utility. And now we can go on a really big rant about supply chain, smart contracts, land registry, remittances, voting, and
Mhm.
and the 100 use cases and applications that it brings to every industry.
But maybe we talk about your use case first, being Scrypt.
Sure. So we have two branches or two pillars in our organization. The
Mhm.
first is our markets division. That is our OTC desk and our 24/7 trading abilities, our best execution prices, multiple fiat currencies, secure custody, API integration. And the second would be asset management. Under asset management, we have two investment products. One is arbitrage, and the second is yield. And what kind of geared me or shifted the journey to the result or the end goal or product that is Scrypt
Mhm.
is I found myself in my university dorm outperforming hedge funds, right?
Wow.
Exploiting arbitrage opportunities on simple exchanges like Kraken or otherwise. And at the time I was studying my master's at LSE, I found I was out earning my professors in terms of income just by staying on my laptop with my glasses. And this is a conversation we've had with many people on, we are coming from the aspect or the point of view where this Bitcoin thing is great, let's start a hedge fund. Not
Mm.
a hedge fund waiting around calling it a scam, not really understanding the philosophy, or at least having a lack of passion about it. And then
Mhm.
they hear about the returns and the alpha, and suddenly they're integrating crypto into their strategy or
Mhm.
into their portfolio. So
Mhm.
we're coming from a crypto side of view, and then we're kind of institutionalizing ourselves in the offering. And we're not simply swallowing up crypto because now it's been around for 10 years. Other people have tested it and it's endured the kind of test of time, if you will.
No, I see that. Maybe we'll follow up on that point straight away, whereby I definitely see that there are two ways by which crypto firms are currently operating, right? Either in this unregulated Wild West approach or the more legitimate way that your company is following, but at the same time, it's a bit more cost and time heavy. So maybe you'd like to give us, our audience, a view into the challenges that have taken place following this regulated route.
Sure. An analogy I like to use often is the bridge that connects the traditional world of finance and crypto. This bridge is unnecessary and it's mostly by people who have FOMO, that is fear of missing out. So
Mhm.
you see these big banks and these institutions calling crypto a scam, and then 3 years later developing their own coin or branching out or diversifying a large amount of their assets into crypto.
Mhm.
And we like to say there's no need for a bridge. Crypto is kind of taking over. If you look at Ethereum, 200% up this year, PayPal, 99% up, Bitcoin, 80% up. And you look at JP Morgan, Wells Fargo, Barclays, NatWest, DBS, and all these guys are going down. JP Morgan have a coin, DBS are launching a crypto exchange. So we are a bridge because there's a necessity to do so at the moment. And
Mhm.
you can see the many attempts from these strong incumbents to try and not lose out and to be part of the next step in finance, or call it capitalism, or following whatever macroeconomic trend that is now happening with Bitcoin and other cryptocurrencies and blockchain. One of the main challenges with regulation is you're trying to combine the innovation and the efficiency of blockchain and digital assets with the inefficiency and the bureaucracy of regulatory bodies, governments, and banks. So a lot of the crypto companies are playing cat and mouse with banks because they simply won't open them an account, or they'll open them an account under the privy or the constraint that they can only trade with that counterparty. The advantages far outweigh the disadvantages, and there's many routes you can follow when tackling regulation. So an easy fix back in the day, 2-3 years ago, was Malta, Gibraltar, Estonia. And you see these as not really the top jurisdictions because of, well, I don't really need to say it. You can just look at the recent news articles about money laundering in Estonia. You look at MAS, the Monetary Authority of Singapore, and they've recently opened up. You look at the UK, and they're recently opening up. I believe RCAPS was one of the first companies to get FCA regulated, and now they're doing a CMF, AML kind of regulatory sandbox hop. So the main challenge in regulation is the paperwork, the inefficiency, the cost, and the added time. Once you've incurred this lump sum and kind of sunk cost, then you're in a much better position. But you have to be able to withstand the test of time and pay all these bills before your infrastructure is fully established. You see other crypto companies who don't follow this route and who simply make a lot of money and hop from jurisdiction to jurisdiction. And you can see a shadow or an emblem of this in Binance's early days, right? Where they're kind of running around everywhere and they're making so much money that even when they get told off by the authorities or regulatory bodies, they kind of hop from jurisdiction to one another. And you see in Switzerland, they're a bit more advanced. They're a bit more innovative, and they're putting in procedures like the travel rule to, again, institutionalize and regulate this environment. Now, there's many aspects to that. You could argue that implementing a travel rule is good for strong incumbents who know what they're doing and kind of pushes out all these new entrants and adds to the burden and the regulatory work they need to do in order to establish themselves and grow as a company. You could also argue that the travel rule is against the very ethos of cryptocurrency. And I'm not talking about anonymity. I'm talking about privacy, no barriers, no capital constraints, no middlemen, no fees, and no control mechanisms. So there's good and bad points to getting regulated or not. We obviously took the regulated route because we want to accommodate institutional investors. Yes. And with the regulation comes the comfort that your funds are safe. A famous line by the CEO of Binance, that we are professional, that you have a white glove service. We like to say human touch, machine precision, and we know what we're doing. That is, when you buy Bitcoin on Coinbase and there's an error, they'll take 2 weeks to get back to you. When you buy crypto from other service providers in Switzerland, you may or may not get crypto that day. Settlement isn't fast. Whereas with us, it's more or less instant settlement, secure, institutional spreads and pricing, and that we are one of the, if not the cheapest guys in Switzerland.
Wow, so it's a big statement, and you've probably fully embodied the Swiss mentality, as your domain is actually .Swiss as well. I'm sure it will pay off on the long term, and maybe we can go further into that when you touched a little bit on security. And I can tell that Scrypt has as an ethos to have security at one of the top of your priorities. So maybe you can tell us more about what makes Scrypt so secure.
Absolutely. So I cannot take all the credit for this. This is our custody partner, Fireblocks, who are one of the biggest and best guys in the space. They came out of stealth mode, and I believe they've just passed 150 billion in transactions, which is amazing. And the security aspect of this is, I'm a firm believer of not your keys, not your coin. Now, there are some compromises with this when you're dealing with an institution who has no experience, knowledge, or expertise. And you kind of have to take that mandate of securing their funds and making sure that there's no one single point of failure. Now, how we work is your private key is divided into multiple little pieces, right? They call this sharding. And we hold these pieces on hardware and software devices. So there is not one single point of compromise. That is, we don't have a silo somewhere where someone can drop in with a SWAT team and steal your Bitcoin. And we don't have hot wallet key compromises. And you look at the space and you look at every hack known to man, from NTGov to 1 week ago, DeFi was drained 25 million, to KuCoin, which was drained of 300 million, if I'm not mistaken, and Verge, where more or less a 19-year-old exploited 2 out of 3 lines of code to mine millions in a couple of seconds. So security is paramount to this industry. And I think if you look at the numbers, there are 2 major hacker groups responsible for all this drainage of fund, and they're estimated to be taking 1 to 2 billion a year from hacks. So we take security extremely as one of our top priorities. And I don't like to say it's a unique offering because it's standard practice for us. But when you look at all the other players in the space and maybe the top 40 people in crypto offering institutionalized service, then it is actually a unique selling point.
I see. That's probably what brings the institutions on board, right? If they have something that is secure and that they can rely on, they'll be more willing to join the space. And it actually follows on from a headline that I read today stating that institutions are finally here. Do you have any thoughts on that statement?
I love it. I love the irony in JP Morgan calling Bitcoin a scam and then trying to build out a software department and not being able to do so, and then selling that to consensus and in turn raising something around 15 or 50 million for this software company. I love the CEO of PayPal calling it a scam, and now PayPal recently launching it and people going crazy. I love the central banks who are now exploring cryptocurrency. The Central Bank of China, I love that it's legal tender in Japan. I love that the Swiss bank are trying it out now, the Swiss Central Bank. So I love everything about it. And if you want to have a few drop the mic statements, then you look at MicroStrategy, who have now earned more in Bitcoin than their net revenue over the past 3 years. So there's the financial aspect, there's the economic empowerment. You look at the WikiLeaks founder and all these people who were ousted as whistleblowers, who weren't given a bank account back in the day, and who put all their money in crypto, and who were very, very thankful for it. And if you look at publicly traded companies, I think around 1 billion or more is held with them in crypto. You talk about the institutions are here. 50% of accredited investors in the US are interested or have bought crypto. You saw a spike, and this may be going towards retail, but you saw a spike on Coinbase of purchases of 1.5 to 2.5K USD when they received their stimulus or universal income, if you will, during the coronavirus. And institutions are coming in. Why? Because the best performing asset class of this decade is crypto. And how did we think it was going to act during the coronavirus? We saw it outperform stocks, SP 500, oil, and even gold. And over a large amount of time, there's no correlation to these other commodities and markets. So it is truly a safe haven. It is a hedge against the current macroeconomic capitalist. I can get really philosophical, but it's a hedge against the current society, against the Fed. There's a common line in crypto where money printer go brew. And what this means is that the US is in more debt than ever before, and that whenever they need money, they do something called quantitative easing. And it's as simple as printing. And we can go into the beauty of Bitcoin and the fixed money supply and deflationary economics and Austrian economics, and how each miner is a mini central bank getting rewarded for validating transactions and creating money supply. Or we can look at Jerome Powell of the Fed printing money, right, and trying to stimulate the economy. So a main attraction to me as I studied economics on my bachelor's and my master's, and it has a use case, it has a utility. It is grounded in theoretical soundness. And if you look at the past 10 years and the empirical data, it all seems to make sense. So when they say the institutions are in, I'm here telling you they've been in for a while. There's just no need to shout this at the top of the rooftop. And you look at pension funds who own equity or shares and stocks in these publicly traded companies who own $1 billion worth of Bitcoin. Because of this, because of pension funds owning it, you have retail people who have exposure to Bitcoin. And again, the best statement about this is MicroStrategy bought 400,000 or 500,000 worth of Bitcoin in, I think 4,700 mini transactions. And they tell you after, they don't tell you while they're doing it. A lot of companies will come out and say, hey, turns out we have a lot of Bitcoin.
Yeah, just magically appeared in our wallets. I guess it's true, right? You need to be careful of who you listen to, and as you stated, right? Jamie Dimon said, oh yeah, Bitcoin is a scam, just to plummet the price back in 2017. And then we find out later that they bought when Bitcoin dropped 30%, right? So it's always to be a little bit wary of how things develop. But maybe you can tell us, like, these institutions you're stating are buying hundreds of millions of dollars in Bitcoin. How do they do it? Do they go through just a traditional exchange? Is over the counter practice? What is the normal approach here?
I don't think there's a normal or orthodox method to acquiring this, and it depends on the institution themselves. Some regulated counterparties prefer freshly minted coin, and that is, a Bitcoin which has no transactional history and just created by a miner. and it helps their AML and compliance. Other people are buying on regulated exchanges, small amounts. And mostly, to my knowledge, this is done on OTC, that is over-the-counter exchanges and desks and venues. Over-the-counter means it's not reflected in the order book and you're not hitting that much slippage. That is, you're not meeting an order book, so you have the liquidity for large orders and you're not shaking the market. Whereas if I had $20 million and I went on Kraken and I just bought a market order for $20 million, then the price of Bitcoin would pump a bit. And we saw that in April of last year, where someone with $20 million managed to increase the price by 100 to 200% through algorithmic trading. That is, he was meeting order books on different exchanges at various times to promote growth, if you will. We call it a pump, right? It's market manipulation. Other institutions will do smart order routing, where they divide across 20, 30 exchanges and try and get it at the best price, time-weighted average price, so dollar cost average, and that they're not looking to acquire 10,000 Bitcoin in one purchase. And that would emulate or reflect MicroStrategy's, right, when they purchased the 500,000.
And so have you seen an increase in volume then of transactions, of people buying various crypto or even transacting, trading with it?
So there's two elements to this. The overall market has seen a huge spike and increase, and I'm talking or referring to the 1 trillion transacted over the Ethereum network, to the 3 billion locked up in Uniswap. And we also as a firm have seen an increase in transactions. So when COVID hit in the beginning of the year, we kind of looked at each other and said, oh, it's going to be a bit of a bumpy ride. And then stablecoin transaction or volume increased by 400%. And you were seeing people in the midst of the pandemic investing more into alternative investments or non-traditional assets in order to hedge their risk. And we were surprised at this trend. We were not expecting it. And you see the overall market, everything has increased in terms of volume traded. So there are key performance indicators that you can measure, and you can see the decrease in volatility, the overall market cap, and the increased volume on all these different types of cryptocurrencies and altcoins. More recently, the DeFi space, which has seen a huge boom in terms of volume.
Very, very significant one. And so can you tell us how you believe this whole asset management space is going to develop?
We're going to tokenize everything. In 5 years, you will have no middlemen. Hopefully, it might take more than 5 years. And what I find ironic is Bitcoin and blockchain is all about removing third parties, removing middlemen, removing barriers to entry and obstacles. And we're trying to Uberify money. DeFi connects the driver to the passenger. Forget about Uber. There's no need for Uber in this case. And what we find ironic is that us as a company, as well as other institutions in the space, banks, desks, brokers, investment companies, are currently successful or making money as a middleman, which again goes against the ethos of crypto. And you'll see asset management on chain in the next 5 years. You'll see increased coercion with regulatory authorities and governments. And I'm talking about less paperwork, API connectivity, a streamlined process, cheaper, more efficient and transparent transactions where you are in control of your money. And I don't need to take 2 and 20 and manage 100 million just to make the day's bread, as any traditional asset management or firm does now. You will see increased returns. And again, I'm referring to the point of transparency, where you can lock up $100 or $100,000 on a protocol and you can watch what they do with it. So my belief is that everything will be on chain. More financial instruments will be tokenized. I'm talking bonds, equity, derivatives, options, futures, perpetual swaps, and even real estate moved on the blockchain. This comes with a lot of obstacles, a lot of barriers from traditional institutions. We're trying to uproot the infrastructure of, I don't want to be as magnanimous and say the global economy, but how things are done currently and right now. So I don't know if it will take 2 years, 5 years, 20 years, or if it's going to happen at the end of next year, because you have so many people coming into it. But I see asset management as cheaper, cost efficient, transparent, faster, immutable. That means trustless, where you implement smart contracts. And I don't need to trust my asset manager or the regulatory bodies or all these top 4 auditing firms, which we can give a list and a list of the bad things they've done. If you look at the MBD scandal in Malaysia and you look at pretty much every week or two, someone gets a fine in finance. It's going to be pretty hard to do those things when you're on the blockchain, when everyone can see what you're doing, where you can't manipulate the information. And I like to think of it as a big game of upside down Jenga with super glue. That is, once you put in piece and piece, you're kind of forming a blockchain. And it is impossible for someone to edit, rearrange, or kick out a piece because it's all super glued, and they have to do it 10 times faster than I'm putting on top of one another. And we can go into the usual pitch, which is immutable, transparent, trustless, peer-to-peer, decentralized ledger. Now, what that means is I can see everything as an investor, as an asset manager, as a bank, as whatever counterparty or third party or direct participant. It's all transparent. And that's the beauty of it. No one can say one thing and do another, at least without you noticing. And when you add smart contracts into that, you don't need any human intervention. I mean, then you can go on to a conversation about Oracle risk and data delivery points, but let's keep that for season 3.
Yes, we shall. And you're a smart guy, Norman. Tell me, what's the future of Scrypt then, if you believe everything is going to be without intermediaries?
So this is a reference to my point earlier about building a bridge between traditional finance and crypto. So we're building that bridge. It's solid, we built it essentially. And we're also underneath that bridge with a big ton of dynamite ready to blow it up. Because we come from a crypto background point of view and we're passionate about it. The products we're exploring now are all DeFi. That is non-custodial, that is no third party, and we're building the infrastructure, the software, and the processes necessary for you to efficiently manage your money. And this can be either as an institution, an accredited investor, or retail. And we're building out data points where people can read, what are the venues, liquidity, order size, minimal viable volume. And we're kind of building out our DeFi presence because we know it's not going to be around for long. And I will refer to the CEO of Binance, who said that Binance is a CEX, that is a centralized exchange that's going to be cannibalized. And he acknowledges this by DEX, by decentralized exchanges. So we know that this isn't going to last forever. And it's a good thing because we are, in unison with the philosophy of blockchain and crypto. And if I'm not needed in the procedure, if I'm not needed in the process, then that's better for you, right? There's no third party, there's no miscommunication, there's no Chinese whispers, and you have more control and overview and oversight over your money.
Okay.
Now we're needed because there's a lack of learning and there's a learning curve and there's a knowledge gap, and it's still a bit of a Wild West. And we want to build this industry throughout. So we were here before the Wild West. We want to be a sheriff during the Wild West, and we want to survive the Wild West.
All right. And so surviving that Wild West would entail you at Scrypt becoming key leaders in education then, and being able to support these people as they get along, and then ultimately interface, being able to communicate with this world as well. Is that what you're trying to say?
I think our strategy is evolving. Our mission is clear, and our strategy is extremely maneuverable to where we want to get to. But the mission is clear, and we will adjust or advance or kind of navigate with the tides of the industry and where people are leaning towards. You look at this is, like a mini birthday for me. You look at Kraken, and they've got a banking license in the US. You would not have predicted this 3-4 years ago. We see now institutions taking over and becoming banks. We thought we were going to see banks buying crypto exchanges. Maybe PayPal are looking to buy a few custodials. That's fair enough. But the overall trend is crypto institutions are coming out of the shadows. They have the resources, the knowledge, the tech, and they're part of the new emerging wave or asset class or the trend in macroeconomics, in society, in politics, in whatever you want to call it. So we're happy to be part of that. The mission is clear, and we could become anything from a bank to a bigger hedge fund to a software provider, as long as we're in the space offering and delivering value to our users.
A lean, mean fighting machine.
We're coming out of the startup environment, if you will, and we're more agile. So if you look at DeFi, we were in the space when there was 400 million AUM, and we were kind of shouting and dancing, people need to pay attention to this. And it wasn't until it hit 9 billion AUM where suddenly all the crypto companies added DeFi on their LinkedIn or DeFi on their service offering, where they went, okay, I think I kind of believe in this thing. Come on, let's add it to the portfolio.
I see. Well, thank you. Thank you so much for that energizing conversation, Norman. As we have to close up soon, do you have any final words that you'd like to share with our audience?
Buy banks, buy Bitcoin. But thank you for your time. I appreciate you enduring my rambling and my my kind of speech. Look forward to maybe another session with a fireside chat. Yeah, thank you for your time, and I appreciate the questions and the interest into Scrypt.
Oh, well, it was our pleasure. I hope the audience enjoyed that one. And if you would like to hear and follow further content related to cryptocurrency and blockchain technology, feel free to check out more on our website, cryptovalley.swiss, where we host plenty of events, educational content, and even provide information on how you can join our growing community. So thanks again, Norman, for joining us. And stay tuned, stay safe, and until next time from the Crypto Valley in Switzerland. Bye bye.